The Canadian banking system looks incredibly fragile right now as multiple things are coming to head all at the same time. These risks have been built up over multiple decades of rampant lending, decades of ever lower standards in terms of lending, especially mortgage lending, and now all these things are coming to fruition. Specifically, we're going to break down the individual big five banks and see how their stocks are performing to get an understanding and see whether there's any divergence. We're also going to go over a couple of stories to jog your memory of what's going on at the banks currently and the financial risks in the system. So many of you sent me this story, and I'm sorry I haven't covered it. There's just been so many things to cover as usual. So Barrie area woman watches mortgage payments go from $2,850 to $6,200, and she's been forced to sell. Now, her mortgage payments have nearly tripled. This is just a crazy story, but you just have to think about how many people are in the same situation as this lady here. I guarantee that it's going to be so many people that bought over the past couple of years. They bought at pretty much all-time high prices, variable rate mortgages. There is just a crazy amount of variable rate mortgage. There's been a crazy amount of investors that have bought properties over the past couple of years, and it's just a quite frankly risk-ridden housing market to get into right now. So what her situation is, even though it's an isolated case, it's not really an isolated case when you think of the wider perspective of what's happened here in terms of lending, which is that there is so many people in the same situation as this lady. So it's very interesting, and we'll go through what she's saying here. Obviously a very emotional story. So forced to put her family's dream home up for sale after their mortgage payments ballooned from $2,850 to $6,200 since moving into their Springwater home in January 2022. So she was literally one of the people who bought right before the Bank of Canada started hiking in March. And it was just 25 basis points back then, remember, but that turned the entire housing market. And why I like to highlight that is because it's all about sentiment and psychology and less about interest rates like mainstream media would have you believe. The mainstream media would have you believe that everything now in the housing market revolves around interest rates, that it doesn't revolve around the bank's willingness to lend, that it doesn't revolve around people's psychology on whether they're stupid enough to buy into a bubble. It's all about interest rates. As soon as those interest rates come down, boom, the prices are off to the moon. But what happens if we're in a banking crisis? What happens if banks don't want to lend? What happens if they're pulling in people's credit? You know, these are all risks that are out there and are highly likely, considering the bubble that has been blown is even eclipsing the size of the US bubble in 2008. Just absolutely insane, guys, as you know. So to have to leave a home that we spent so much blood, sweat and tears into building, everything was custom built for our family here, and now to give that up, it definitely feels hard. But now looking at rentals, we're looking at $4,000 a month. It's not like we're struggling for work or anything. We make good money, we have good jobs, but it's just we want to be able to live our lives and not be putting every dollar towards a mortgage. So she's essentially house poor. Like so many people across Canada right now, she is house poor. I mean, I was reading literally the other day about a guy who was moving from Vancouver Island to Calgary, and it was because his variable rate mortgage had gone up so much, he decided to leave. People are moving from the frying pan into the fire essentially, because you're trying to essentially move away from the problem whilst not realizing this is a nationwide issue that is happening, and buying into a market at all-time high prices is just ridiculous. You think they would have learnt their lesson over the past couple of years, but I mean, the insanity of people right now when it comes to the Calgary thing, it is quite frankly hilarious and fascinating at the same time. But anyways, that's an unpopular opinion because most people are just so extremely emotional when it comes to Alberta and Calgary in particular, which tells me a lot. So anyway, while Cook and her family haven't turned to the food bank yet, she says one can understand why reports of family making over $100,000 are making use of the social service. And then she basically talked to the executive director of the food bank, who said that the Bank of Canada rate hike will increase demand. So you've got a lot of people who are on variable rate mortgages who are turning to food banks. And one has to say, well, is that actually right? Because these people, they actually put themselves in this situation. They cannot blame anybody but themselves. And I hate to say that and be so brutal, but we need people to be brutal like this. There has been too much sugarcoating bullshit in this country. And that's quite frankly why we are turning into this crappy society that we live in right now. Is because nobody takes responsibility for their actions and what they've done. And they just rely on things like food banks when they should be selling their homes. So it's like, okay, I got variable rate mortgage, my mortgage payment goes up, so I'm just going to rely on other people giving me free stuff despite it was my fault and I made this mistake and I should pay the price for that. Instead, I'm going to rely on other people. And there are legitimate people who want to use food banks who actually need that food more than the people who just made unbelievably bad financial decisions. Now, whether you point the finger at the banking system, whether you point the finger at the individual, whether you point the finger at the realtors, the mortgage brokers, is entirely up to you. And I would love to hear about what you think in the chat and the comments. I'll check them after this video into what you think about this whole entire situation, because I do find it absolutely insane that you've got people earning over $100,000 going to food banks. Do you even think that should be allowed? I mean, I think it's just so obvious right now that things are so broken and these people are just literally doing anything they can to make ends meet, but they're not going to make ends meet. That's the problem. The thing is, they need to sell. This lady is ahead of the curve and she's actually decided to sell. Most people are going to be far too attached, far too emotional to sell, but she's made that decision and decided to sell. But this is like a pyramid scheme, guys. If everybody runs to sell at the same time, guess what's going to happen? Prices are going to crash and everybody's going to get foreclosed on. But that is the reality that we're heading into. And that is the reality that I see down the road right now, considering what's happening. It's just people are too stupid and blind to even see it. Like, we hear all these different things and then people try and rationalize why it's happening instead of thinking, okay, if all these people on variable rate mortgages are going to food banks, isn't that going to mean a housing market problem in the future? No, I'll just buy Calgary real estate at all-time high prices and I will be okay. Oh man, I'm sorry, I have to make light on this somehow. So anyway, that's what's happening. She understands why that's happening. And obviously we've seen that over the past couple of months, banks have been downgraded by other banks. I don't really think this is something of massive weight that we need to be looking into, because the fact is, all these variable rate mortgages that are negative amortization, you would have expected the credit ratings agencies to come in and say, no, we're downgrading you, and put all these Canadian banks down, but they're not doing that. So it just goes to show you once again, the ratings agencies, who do they get their money from? You just have to follow the money to realize that the system is completely rigged. Even the regulator is an ex-banker, for crying out loud. The person in charge of the CMHC is making $450,000 a year. Banking background. I mean, it's all run by the banks. It's not a conspiracy theory. It's the reality, whether you want to accept it or not. So, and then obviously we know about what's happening at CIBC. We've been through this on this channel. CIBC is under the banking regulator's watch because of unknown amounts of risk on their balance sheet as it pertains to basically mortgages and people's loan to value ratios getting way too high above the regulations. And I just find it insane that when we went through this a couple of months ago, again, they didn't know the amount of risk there. And we all kind of forget about these different things that are going on, but they are all still happening and things are just getting worse. And they're just happening in the background, so we don't discuss it enough. And that's why I've come out with this video. And then it's not just that that's happening. Obviously, the Bank of Canada that continues to pile on pressure through its rate hikes, although 25 basis points here or there, I don't really think it's having much of an impact anymore. But the massive amount of tightening that they've done is obviously having an impact. The cost of a floating rate mortgage has now increased by about 70% from the loan since October 2021, which was around the peak of the housing market when interest rates hit a record low and more than half of home buyers took out floating rate loans. So think about that. Half the home buyers, when we had the record amount of sales, were taking out these variable rate mortgages. Many of them are heading to the food banks right now. You've just got to think about how crazy this is and the amount of risk in the banking system, how fragile the banking system, and it will all kind of make sense when you see the pressure on the bank stocks. It does make sense. So it's obvious what's going on behind the scenes right now. They're estimating around 331 billion Canadian, 250 billion US in mortgages come up for renewal in 2024 and 352 billion the next year. They're talking about the refinancing challenges that are going to come. Of the big six banks, Bank of Nova Scotia and National Bank are the only ones that basically hike their mortgages, don't allow negative amortization. So they're going to be interesting ones to watch, but I would say they are less risky in that respect from the negative amortization, because the negative amortization is increasing risk for those banks. A lot of people would think it's the opposite, because obviously by doing that, people aren't defaulting, which is great, but they're actually extending them more credit and allowing them to go more into debt, which means they're less likely to pay it back, more likely to default, so therefore the risk goes up. And I think that's obvious to you and I, but it's obvious to the regulators as well. They're just blind to do anything about it. They don't want to do anything about it because the banks are ultimately in bed with the regulators, just like in the US before the 2008 financial crisis. I say before the financial crisis, they're still in bed with the regulators right now. Are you kidding me? More than 3/4 of people with variable rate mortgages had already hit their trigger rate according to Desjardins. So again, you've got insane amounts of people hitting their trigger rate, so it will just continually go up from then. You have to remember that. So kind of crazy what's happening. And then let's get onto the banks and how much they're actually down. First of all, I want to start with a Singapore bank just to show you that it's not a problem with all banks, because that's what you'll hear. You'll say, oh, well, all bank stocks are down after the liquidity crisis and regional banking crisis in the US and when Credit Suisse failed as well. But that's not the case at all. Yes, this bank is down off the all-time highs, but it's still up when you look at the 5-year chart. So from the all-time high to now, it's down around 12%. So now let's look into the banks in Canada. So let's start off with the Bank of Nova Scotia. So off its all-time high here, it's down a whopping 32.61%. So it is down massively. And then if we go to the Royal Bank, you can see that put in its all-time high again, like most banks back in 2021, and it is down 16.84%. And then CIBC, this is the one that's down the most, as you would expect. They are the biggest mortgage lender in Canada in terms of the percentage of their balance sheet being concentrated in mortgages. They are the most exposed to the Canadian housing market, and this bank is down the most. Coincidence? Maybe not. So let's get into it and see how much they are actually down. So from their peak, which was back in 2022, they are down nearly 35%. You are back to 2019 levels and you're even under it right now. So this is very, very low considering going all the way back to like 2016, 2015 levels in terms of CIBC's bank stock. So kind of crazy. And then if we finally look at TD, which has had many troubles as we know, and that is down 22.12%. And one bank that for some reason I left off here was BMO, so we'll just check that out real quick. So the Bank of Montreal here, that is down 25.35%. So the biggest losers here are CIBC, BMO, and the Bank of Nova Scotia. And there's some interesting things that you might not know about the Bank of Nova Scotia and BMO, and that is they are involved in China. So I'm going to leave links in the description where you can go and check this out. But BMO is in China, considering all the risks that are going on with the economic crisis that is happening in China. One, you've got the real estate crisis, which is 30% of their GDP. Another, you've got the fact the demand for their exports from countries like the United States and Canada and other countries are way down because we're in recessions right now. It's not a good time for China. Things are not great in China. And another bank, which you would expect to be in China as well, is the Bank of Nova Scotia. The Bank of Nova Scotia is in all kinds of emerging markets, and it's one of the banks that is down the most, alongside with Canadian Imperial Bank, which is CIBC. So they are down massively. So let's quickly just touch on what's happening in China, because again, we've had more news out of China of what's going on. So China, next real estate giant on the ropes. The world's 138th largest company, according to business magazine Fortune, said last week, due to a decline in sales in the real estate industry, it was on course to lose between 6 billion and 7 billion in the 6 months from January to June 2023. So we started talking about the real estate crisis back in 2021, to jog your memory, and it's still going on in China right now. So Canadians should be listening to this, because this was the biggest real estate bubble in the world, and Canada is in for the same insane ride down as China is going to see as well. And it represents a large amount of the Chinese economy, just like it does in Canada as well. So for people who tell you these bubbles can continue forever, it is complete nonsense, absolute nonsense. And the 138th largest company, just think about that. That is a very big company. Over the previous 2 decades, as the Chinese population grew more wealthy and an unprecedented construction boom led to a quadrupling in real estate prices, hundreds of millions of people bet that property speculation would be safer for their savings than the country's volatile stock market. But doesn't that ring true? Because even though it's not about the stock market necessarily in Canada, it is where people think it's safe to store their wealth in Canada. And it's just hilarious, because you see these bubbles burst, you see the demise happen all the time in different countries, and you can see it coming, and you can see these stories that people give of why it can continue forever. But then when it all starts going wrong, you don't hear a peep out of them. In 2022, you had the record real estate price decline, and you had the record population growth as well. So obviously, I'm not saying that population growth doesn't put pressure on real estate. Obviously it does, but it's at a much lower level than the mainstream media and the politicians would have you believe. And the thing is, Canada has been in a massive construction boom for the past 4 or 5 years actually. Yes, there is going to be a deficit of homes coming into the future. It's not just all about new construction homes. You've got Airbnb taking up a massive amount of inventory. I mean, it's far more complicated than just population growth. And that's what bugs me when people are just like, immigration, population growth, that explains everything. And it's just like, no, it's just yet another story. So first Evergrande, and that was back in 2021, and now Country Garden. So as Chinese real estate sector contributes as much as 30% of the country's GDP, any collapse of Country Garden would have a damaging impact on the entire financial system. So it just goes to show what's happening in China. So it's not good things that are happening out of China. It's not good things that are happening in the Canadian banking system. You just see risk all over the world right now, but especially here in Canada, where you have financial bubbles, not only in real estate, but also in corporate debt. Anyway, if you've enjoyed this video, you might like this video here. You might like this video here that I recommend to you. If you're looking for a VPN, check out my own VPN provider, which is ExpressVPN. Go to expressvpn.com/marketmania for that. Honor to be here. Honor to have you as a viewer. Thank you.